Imagine the Bitcoin ETF approval is a buy the rumor, sell the news event. Actually, I think that's pretty likely. That's pretty much what happens with any such anticipated event. People are buying up to the event, and that's what we currently see. We see Bitcoin has doubled since beginning of the year. And then once the news hits, the people that speculated on this rally sell off. Now imagine after that approval, right, it still takes some time until trading starts. And then comes this next news. When does trading start? How much adoption will really happen? How much capital inflow will happen? Imagine people get disappointed. Imagine there won't be as many inflows into Bitcoin as anticipated because everybody that wants to get exposure to Bitcoin already did this either directly via buying Bitcoin or through some other circumstances, getting into the futures ETF, or by buying indirectly, maybe through buying MicroStrategy, right? There's all kinds of vehicles how you can get around the non-approval so far of the Bitcoin ETF. So maybe the launch itself won't even be that big of a deal. Maybe we don't see all of these cascades and avalanches of capital getting into the market. What happens then? We might see another crash. Actually, that is something that kind of happened with the Bitcoin Futures ETF. 2 years ago, the Bitcoin Futures ETF had been approved and it started trading, and the interest was rather lackluster. People didn't really buy or sell that Futures ETF. So who knows what happens with the IBTC BlackRock ETF and all of those other Bitcoin spot ETFs. If people buy, if institutions buy, and of course this has direct implications on the Bitcoin spot price, because at the end of the day, the difference between whatever has been bought or sold has to be then settled on the spot market. It doesn't have to be settled directly, but at the end of the day. So of course, if Bitcoin flows into the spot ETF, this will have impact on the price. But who says that that's really what's going to happen? Nobody really knows for sure. Now let's play with the opposite scenario. Let's say the Bitcoin ETF, the spot ETF, will be a huge success. Billions and billions of dollars flow into Bitcoin. What happens then? Let's say the Bitcoin spot ETF is simply just another allocation in a broadly diversified portfolio. Maybe it becomes common wisdom to have 1 to 3% of your portfolio in Bitcoin because of its very low correlation and its nice long-term above average returns. So it becomes a common thing, right? Similar to maybe how the 60-40 portfolio, 60% stocks, 40% bonds, became common wisdom, or how people said, okay, you might want to have 5 to 10% of your portfolio in gold, right? All of these kind of rules of thumbs are now pretty much common across the traditional investor space. Let's say it really becomes a thing that a 1 to 3% Bitcoin allocation also becomes part of this rule of thumb thing. And it's not necessarily a hedge similar to gold, it's rather a risk on thing, right? Similar to like a levered tech play. If that's the case, what will we then see with the Bitcoin price? We'll see that one of the main unique selling points of having a Bitcoin allocation in a broadly diversified portfolio, one of the main USPs will actually vanish. Because when all of this traditional money is in the space, the correlation between Bitcoin prices and stock markets will increase a lot. Right now, the correlation of Bitcoin to the rest is super small. So we've seen this massive run in Bitcoin. In the last month, we went up by, I think, around 30%, while the Nasdaq simply just went sideways. So the correlation right now is not really there, despite what a lot of people say. The only time where we see correlation is through a liquidity crunch. If really liquidity is tightening up massively, then we see some correlation. We saw this in the Corona crash, right? So first, the tech stocks went down, Bitcoin went down roughly 1 week after that, because somebody probably needed liquidity and sold their Bitcoin off. This then triggered a cascade. Now the leverage was put out of the system. So we saw this massive crash in Bitcoin, also as a result of Corona. But also during this time, when we saw the stocks crashing, we saw gold in the first 3 days going down as well, which is counterintuitive, right? One might say, okay, there's maybe a rush towards gold. When everything is uncertain, people are buying gold. But that's not what's happening instantly during a liquidity crunch. And this is where I do see currently still the correlation being high between Bitcoin and traditional markets. Only in those events. Outside of those events, currently the correlation is super, super low. And that's very nice, because when you have a broad portfolio, you can now start shifting. So the first big, great aspect of this is when one thing goes up, the other thing just goes sideways or goes down, you get overall less portfolio volatility, right? You mix a lot of things that don't necessarily move in tandem to one another. You mix them all in a portfolio. Your overall portfolio has less volatility. And that's great, right? Same kind of return, right? But less volatility, less risk, less fluctuations. That's why you want to have a broadly diversified portfolio of lowly correlated assets. But once correlation goes up, because all of this traditional money is in, and they simply just treat Bitcoin as another risk-on asset. And whenever they sell off tech stocks, they also sell off Bitcoin, and vice versa. When they want to get risk on, they buy tech stocks, they buy Bitcoin. When all of that trade money is in, the correlation goes up. And so Bitcoin as a portfolio diversifier, the utility of that diversification effect goes down massively. So that's not great either, right? So no matter how we spin it, bringing a Bitcoin spot ETF on the market, of course, helps to expand the market, but it's not necessarily the best thing over, say, the next 20, 30 years. It's great for the next few years, but we then have to think about what do we actually do over the next 30, 40 years. Is there maybe a replacement for Bitcoin, something that's maybe a bit more efficient? Right now, I don't see this anywhere in the altcoin market. I don't even know if it's going to be an altcoin or if it's going to be an entirely new asset class altogether. But it might happen at some point that Bitcoin just becomes another usual gold kind of commodity, tech kind of commodity, high correlation with the rest of the market. And so all of this benefit that we currently have to shift around our assets, whenever one of those assets crashes, we maybe sell from another asset class, put it into, say, Bitcoin. Let's say Bitcoin crashes, you can then take some of your stock, use it to buy up Bitcoin. All of that benefit that we have through diversification, through low correlation, goes out of the window, because now you can't take advantage of those different timings of the price dips in those different asset classes, because they all move in tandem to one another. So not everything is good with the ETF. Right now it's all good because we have the rumor. We don't yet have anything that happened. I personally, right, if I had to bet my money somewhere, I very much believe that the ETF approval will come. We see this also in the grayscale Bitcoin Trust discount shrinking further and further. Now we are at roughly 11%. So there's a very, very high likelihood that the approval will come. But I'm not that so sure yet that once the Bitcoin spot ETF gets traded, that we really see the masses and masses of capital flowing into this. To me, it looks like the BlackRocks and Fidelities of this world, they are launching this because of external interest, as in retail people might be asking them to launch this, for example, to put it in their 401ks. But I'm not necessarily sure just yet if an insurance company or an endowment fund, etc., if they will buy 1 to 3% of their wealth in Bitcoin anytime soon. I think there's still a very long time to that. My main case right now is that Bitcoin will continue to rise in anticipation of the ETF approval. The ETF will start trading. That trading will be somewhat of a disappointment. We probably see a bit of a correction again. And then over time, over the years, we see more and more inflows, people dollar cost averaging into that ETF. And over time, the correlation will increase. How long will that take? 5 years, 10 years, 15 years? Your guess is as good as mine. At some point though, this will all be over, that for the speculative minded, that it's okay to have 30 or even 40% of portfolio in Bitcoin. This is likely going to be not that reasonable anymore in the future as correlation goes up and the expected returns also go down with the market cap ever increasing. If Feel free to give this a thumbs up and join our Telegram. Link is down below. Bye.